Hello, guys. Welcome to Traders Therapy Session. I'm your host, like always, KRO. I thought, why not making a market commentary video, as we can see right now, watching the price and what is happening at the moment. Just give me the moment, guys. Then from here, I will walk you through my analysis. Basically, what I'm looking at, guys, I'm looking at the price, whether it wants to give us the straight away move up or it wants to just give us the lowest low as it prepares. Right here, you can see we have relative equal highs right there. So that's what I'm looking at the moment. How did I came up with this trade? Let me do some few ticks right here. So I will want to see if price will be attracted to come and get this buy side liquidity right here. And this is what you want to do so that you can be efficient and effective. So this will be my buy side liquidity. Then it needs to be on top, but you don't want to always write this. You just want to put this at your disposal. I just realized that I don't have a buy side liquidity, but I have a sell side liquidity right here. So I will save this as a template, so that next time whenever I see such a thing, I know what I recall for the labeling purposes and stuff. This might be a missed trade. Let's just go one here. So right below 50%, I wanna put my sell stop right there. In case I'm wrong with the move, I just put one contract right here. In case I miss this trade, at least I would have capitalized a little bit out of it. But if I'm wrong with it, so it will stop me just after this 50% of this. Actually, I should have put it right below here. I don't just expect the price to even move 50% of that, because I wouldn't want to treat this as an order block at this moment. Why? Because it didn't take out liquidity, as relative to referring to this lows right here, in reference to this lows. So I'm just purely playing closest hanging fruit trade. a Silver Bullet AM session, and if I'm wrong, that's it. I'll see if I call it a day or I take another trade. And if I'm right, then it goes to my direction. I'm looking if price will, in 5 minutes, what fair value gap do I have? This small fair value gap right here. Let's change the colors. This is my point of reference at the moment. So everything on my trade, it's basically based on that. Guys, let me walk you through my analysis. I think it's better if we even start here. There are not long-term buyers at yet. If you've been following my videos, guys, you will understand what we are doing here. So we had the long-term highs being taken out, and then we had that at this point. You can see that we were anticipating this to be a swing high. Then after that, you will see on a daily how this, let's remove this from here and leave it only on daily, not weekly. You want to keep your charts clean, guys. So what I basically saw was that we took the high, and after taking the high, we had this fair value gap, of which I talked about on one of the recent videos, and this one as a draw on liquidity. So we can have this break right here. So I'm watching how price reacts here. But today, I'm not taking a trade based on this right now. I'm just taking a lower time trade, the lowest hanging fruit trade, by the way. And I will explain why. This is how you have to channel yourself when it comes to the markets. What is happening on a daily time frame is that as we took that high, this is the swing high we were anticipating, then we went higher. Then you can see yesterday, was it yesterday? Maybe I will share the analysis. And before, on a kind of previous videos, this was our draw on liquidity. So we reached that draw on liquidity. This is what you want to do when you reach this type of a stage. When price reaches this level, you are done trading. You want to wait and see whether the price will give you the signs to go up or to go down. Then this is what you're going to do. Price is here. You want to wait and see the willingness of price to move higher, at least maybe to close this or to break below, to balance this into this level. So in the morning, was it the morning? So I was looking at this area. And morning, I mean my side, that London session, guys. And then I was looking if the price will reject, because we know this gap will often act as a support. If price is above here, bounce on it before it cuts, before it breaks below, I mean to say. So looking at that, we are going to take this 2 lower time frame and see if the price is willing to go high or it's willing to go low. That will frame our buyers though. Let's go to 1 hour time frame. As we get to 1 hour time frame, guys, we have a fair value gap though. I'm watching how price is going to close as it comes to this area, because this is what we use as for sell. You will find me saying that, but I will show you why am I taking this bias to buy, at least to see price maybe spooling up to the areas like this before we go low. But I will just have to show you. So on 1 hour time frame, we are inside that gap, guys. No trading range. As we were inside that gap, we are inside that gap. Being inside that gap, you can see the price as testing the highs. I was checking, you know, the sensitive areas of gaps: 25%, 50%, and 75%. We have 25% right here. Price tested 25%. You can see it bounces off. Then we came to 50%. Then What is left is 75%, then 100%. That could be the draw on liquidity. Now I'm taking my bias inside, or if not this low, then this high can be the draw on liquidity for it to maybe to go high, bounce off before it can even finish balancing this area right here. So what is it that I do, or what is it that I did? Looking at price like this, we can see right here, we have yesterday's lows right here being taken out, previous day's low. We have liquidity on the downside. We took out liquidity on the downside. Then what is it that we're expecting, or what is it that we should do? Look at the liquidity on the upside. Go into 15 minutes. So this is the minimum, at least, that it can take before it can even go down. So looking at 15 minutes, you can see here, let's take time into consideration, guys. What time is this? 15:45. 15:45. We have this low. What time is this? Around 9:15 today. This is around 9:15 today. Around this area. Let's go somewhere, and please focus here. Pay your attention right here. This is the low, lower low. So the slope, if you are here and we give you, if you are here and you are on a roller skate, obviously you will go low. Or if the car is on neutral here without the brakes, it will go low, right? From this point to this point, you were going low. Let's see on another asset. 15:45. And look at the slopes. And 9:15 right here. You will still go this point to this point. You will still go low, right? Let's look at this one now. 15:45, 9:30 right here. If you are here, you're supposed to go here. You will go high. So these are the buyers that are. This is what frames this buy. So we have smart money divergence right here. One asset is willing to go high, the other one is not willing to go high. So with that being said, that was supposed to be our buy, in fact, right there, to spool even high. With that being said, what else do we have? We have the news coming out right here, 8:15 and 8:30. We have two news coming out right here, 8:15 and 8:30, and I will take those ones as Judas swing. So we have NYSE. Guys, follow. I'm walking you through. Let me remove this. Oh, I want to explain this one. We have NYSE right here. Okay. Then after NYSE, then we have 10 o'clock to 11 o'clock. Let's play with that. What do we call that? ICT. Silver bullet. It's for AM session. From this time to this time, this is ICT silver bullet. What does ICT say to you? Like really, what does ICT say to you? During this time to that time, you want to look at the fair value gap that occurred during that time and utilize that fair value gap to do what? Utilize that fair value gap. This is the busy right here. Then target the closest hanging fruit will be this one. maybe this one or that one right there. So I use 5-minute time frame. I don't compromise when it comes to silver bullets. I use 5 minutes time frame because my back testing has proven that to me, or has shown that to me. So I will look at 5 minutes time frame, then I look at my silver bullet. Where do I get the fair value gap? Sometimes you will get it late, but prior to 10 a.m. you will see a fair value gap, and the price will gravitate to that fair value gap and go after the lows. But I like it mostly when we get the fair value gap inside this time frame, using this inside this range of time, using this time frame right here. So if we can search right here, we have a fair value gap which we tested right here, of which I was a little bit late to enter, of which we tested right here. I entered right there. Then I'm watching where? I'm watching what? I'm watching this. Where my stop loss should go? My stop loss should go below this candle, or even below this candle right here. This candle, I mean to say, right here. So 1, 2, 3 candles of fair value gap. This one, or it can even go that to that area right there. So if we are wrong, if I am wrong, that will be counted as a one of the silver bullet failure, and then I will have to look at what price did in order for it to do what it did. Maybe we were not ready, but for me, even if we go lower, for me it will be nice to go low. When to go low? How? To take this liquidity right here, because you can see we have unfinished business right here. Unfinished business right here, plus we have another unfinished business right there. So what is happening is that you have to look at where the money is. So there's a stop loss here, there's a stop loss here, there are stop loss lying around this point. So, but the concern would be, my concern, my personal concern would be what? My personal concern would be how we came into this low. But nevertheless, closest hanging fruit is the trade. Then, another second concern, but there's an insurance for that. Another second concern would be what? Another second concern would be this. If we come to this 15 minutes fair value gap right here, the price could just do what? Could just give me a mohawk going here. Does that make me a bad trader? No. That doesn't make me a bad trader. So I will want to see how price react as it comes to this area. But I wanna take my position off right here. Reason being, let's drag this thing right here. Reason being, I'll keep on waiting to see if what price is doing around this area. Because basically what can happen is that the price can go high, and after going high and come for this area. So I don't want to hold these drawdowns. So I will just take my position out as it comes here. But, and I know the risk to reward is not appetizing at all. The reason for this is that I was afraid while I was waiting for a trade to come in and the trade will leave me. But if the trade is willing to come back, as you can see, this 15 minutes fair value gap is not taken out. If the trade wants to reverse from this area, then I will want to do what? If the trade wants to reverse from this area, then I will want to take position off right here, then utilize at least some of that as accumulated amount. We are following the 2023 bus driver model now. Remember, this is accumulated distance. that I got. I want to utilize this accumulated amount. As price comes here, I will use some of that is part of risk management though. I will use part of the money, part of the profits that I got here to participate as part of the trades if the trade decides to come here. But if it doesn't, it leaves me. That means I was able to participate with that entry there to protect whatever it gives. As long as the probability of the profit is always on your side, you always have to put that on your side. As long as the probability of that is on your side. Then we go to 5 minutes. Remember now, my trade is based on higher time frame, meaning 5 minutes is the last time frame that I would want to place my trades and stop loss on. That's the reason why I put my stop loss here. I can give a little bit of more hawks here, but it can take me out. It's fine. It's still fine. But I want to see price attacking what? I want to see price attacking this highs right here. Then you want to go to 1 minute time frame. That's where you need a lower time frame than 5 minutes, where you can get the fractals, where you will be able to scale in. If you have to scale in, you will look at the smaller structures right there and the continuations though, and look how it reacts to that. And you want to see the bullish in this instance, we are on an uptrend, so we want to see bearish candles being supported by price. So we want to see price coming right above here, taking out price. Then as it comes here, we do not want to see price doing what? We do not want to see price coming back to this area right here. Those are some of the things that we are looking at. But nevertheless, guys, you just want to be able to have a goal, and your goal is one here. Your goal is to be able to save your profits whenever you get your profits. You can see here we have about 60 to 70 ticks. And if you go to 80 ticks right now, this is 20 handles for you. So this is the minimum you can bear. So I couldn't use the full risk per day for the day or for the trade. Why? Because of this kind of a setup. But I said to myself, why not recording this and try to put the voice this time on it? As you can see right here. Okay. Now let me start off by marking my trades. Plus, we have a fair value gap and excuse after taking out the liquidity right here. So as price go, you will see me putting the ticks. Check, liquidity taken. Check. These two seems like they go together. So this is taken out. This was taken out here. So it's this one. No. These are the stops right here. And as you can see, what is happening right here? The price is like inducing the sells right here. The retail traders are seeing what? The retail traders are now seeing what? The retail traders are now seeing the strong resistance, as you can see right here. So now they keep on going in. But the price does this. Okay, guys, thank you for watching. This is your trades AM session closes hanging fruit. I wouldn't want to go further with this one because the day is not looking nice for the trade. So you just take that $100, then you collect. What if the price go higher? No, if it goes high, price goes high, I will want to do what? If the price goes high, I will want to, what do we call this? I will want to watch the price and study the price. And if you can see, if I refer to today's news, let me just refer to this. Guys, if you haven't watched the video on me having to analyze the other side, exposing the other side of trading, this is what is happening, guys. This is my data for December. I do not care about the trades. I analyzed the trade. It's fine. I'll take the pictures for my study. I will show you how I do this. What I care about the algorithmic move on that day. So I will do it with you right now. I will have to, and you are lucky, guys, to be watching this video. Yesterday I did not put yesterday's trades. I will also put yesterday's trades, and I will show you. This is not a hassle. It's just an easiest thing, a little bits and pieces that you have to do on your side in order for you to be able to see this. Then little bit, I have my days for December. This were my time of trading. These were my positions. These are the risk. These are not my position. I mean to say, these are the positions that were supposed to be taken according to the strategy, because I was back testing the strategy. Even now, I was forward testing the strategy, not back testing. I mean to say, when I released the video, I didn't feel somewhere around here. I was at 20 pictures, picture number 20. So this is what is happening. I do not take much care about what I do on the market. I will always improve in the market, but what I take care of, it's what the algorithm is doing each and every day. And this is the reason why I keep the record. You will, if you studied ICT, you will agree with me, and he will also agree with me about having to be positive. Always you must be positive, even if you have lost the trades. Yesterday was my losing day. I lost the trades, but however, I am not going to record that loss into this kind of a journal. In this journal, I'm recording how algorithm performed. I don't want to be watching this journal and then I will show you how easy it is to watch this journal. I don't want to be watching this journal and see the losing trades. Yes, I do, and I did recorded the losing trades, but on some part of the thing, if I need to study that, I will go there. I have analysis where I record the analysis, but this is mainly for backtesting. I only save one picture is the rule because I don't want to clutter. So for December, it's only 25 pictures, and each and every picture represents the day. So I hope I made sense when it comes to that. Then I have the reference. This is how I call the pictures. This was the December month. So I have picture 1, 2, 3. I will know if I want to see what happened during the news. I will just hop to picture 12. Then it will give me what happened. Yes. Then that also helps as an indicator to you study types of news, because this here, what I'm doing is that I'm trading fundamentals together with what? With price action. Because you need fundamentals to trade your price action. And what I said before, most people, they think they know how to trade fundamentals. But guys, this is the new age way of trading. You got to put everything down. If you are watching this video, please give me at least 2 to 3 months of your time. And if you've been watching 2023 bus driver model, this is highly different, guys. Like, you need to be prepared. And after maybe 3 months, let's come back and analyze whether what I was giving you was a crap. Guys, this is an extension to what ICT has given. I'm just extending this to you. And it's a courtesy from ICT, of course. So guys, you want to be using this. Like you really want to be. Maybe on future videos on the link, I will post this, because I have a clean sheet here, where the job that I have to do at the end of the month, the only job that I have to do, and that will happen maybe during the weekend, I will just have to fill my calendar with the news for that month. And for that, what do I use? For that, we are done with the trade. As you can see, they can never ever be a perfect entries like this. This is the closest hanging fruit. Take 100 ticks, move out. And the trade itself, how many ticks was the trade itself? Taking the trades from here, the trade itself was 150. So taking 100 out of that was a good deal. So I use my calendar. Maybe if people are wondering, why am I doing what I do? I use my calendar. As you can see on my calendar, this was December. I will go, this is January here. I will go on December, then I will see the dates on December right here. I only focus on the red type of news. You see, with January the 3rd, we have what? January the 3rd, we have a PMI, and then we have the job openings right there. So this time, it's very important for me. Then you will go to January. Let's go and see January. This is January. January the 3rd. This is what was happening. January the 3rd, yesterday. This is PMI and this is the time. So I want to use this as a reference, guys. And going forward, please subscribe and follow. I want to bring this new way. And guys, please, you can see my development of ICT before. And you can see now where I am. Now give it a time. Give this one a time and see what is happening here. Now I want this one. It's part of the ingredients of your setup, ICT setups. This is part of the ingredients of ICT setups. And you will see how I will analyze. I didn't put yesterday's trade here. We will start with yesterday's trade and today's trade. It was NDP and unemployment claims. Different times. You will see as we journal this. Then we will wait for tomorrow. This is the job that you have to do. This is the only thing that you have to do. But keep on recording the screenshot as you analyze and put them somewhere where you can reference them. You can also make a system there where you are not going to struggle as you go through your charts. So guys, let's go to yesterday's trade. 5 p.m. of which is my time. New York time, that will be 10 a.m. We had PMI. I will start with that. This is what you want to do to your charts. Five minutes time frame. Remember, this is my rule for silver bullets mainly. This is the reason why I only save the charts from 5 minutes time frame. We'll go to Wednesday. This is even Tuesday. We'll go to Wednesday. This is even inside this. We'll utilize the buyers. If you want to know what are the buyers, guys, please check the previous video before this one where I shared the market and I traded. The video is called My First Trade for 2023. So check out that video and then you will see how we were looking for price to come in here. We predicted this long before it happened and we even traded live there. Plus today's video as well. I just want to run the markups for yesterday. Then we can move on to today's markups. Then we close the video, guys. I'm looking for, this is what we want to do. I'm looking for market open. Where do I have market open? Wednesday, this one. And make sure that your trading view time is set onto New York, because we are using a New York time zone. Even if you can see myself, I'm on another country, but I'm using a New York time zone so that I can be in line with the market. Then this is your open. As your open, you want to study the London. Guys, I'm not going to explain more of the picture. I'm not going to. There's a video where I've shared you my December trades. You go and see. I explain each and every trades that right there. This is just a follow-up and it shows that you understand. And if you haven't watched that, please stop the video and go watch that video. As it's just only I'm just sharing with you the trades, how I took December trades, about 20 trades. I share with you the strategy 20 times. Why? Because I want you to get into your head and be stored as a subconscious knowledge. So when I come here, I'll just have to summarize everything, run through everything as a summary. So I will look at the London Open, mainly when I focus on the London Open or pre-open at 2 a.m. Then from 2 a.m., we create the low. As you can see, 2 a.m. we took out the lows right here. Or we can say we created the equal lows or we created the low. It doesn't matter. Then we're going to take what? We're going to take the immediate, there are immediate highs and lows. We take the immediate high just right after. Then we create the displacement. This is the reason why yesterday I kind of lost the trade. Because I was looking, as you can see, I was looking for market to go below right here from yesterday. The direction was correct. But this happened. And let's go through it. This is what you want to do when you don't have emotion. When a trade has already happened, to come into it and see what happened, where you could have flopped and how you could have entered it. Remember that you are not the best here. You are the student of the market. right? So we have I call this one a London low. Usually it's taken from 5 to 7 a.m. Then that happened before. Then we are not utilizing this as a London low. We are going to utilize this as London high instead. Remember, we are still in London. So it means the market opened just to go high. Basically, forget this price. The market opened to go high in order to take out this low. That is the focus. And you see now I'm starting to correct myself as I use my... Do I have a template for London high? Buy side liquidity. Okay, let me just use buy side liquidity. I have this one. And if you're wondering what I do, guys, you can rewind the video. I was just showing you how you can save your lines as a template, because you don't want to write every day. We have a London high. So, of course, we are going to take the previous day's low. The midnight low, I mean to say. This one right here. You cannot keep on saying, giving these things your names. This is not just any low. Here we have a market structure shift, but we'll just have to say this is the sell side liquidity. I'm trying not to lose you guys. This is sell side liquidity. We took out sell side liquidity during what time? London. So we traded this. We were supposed to come even high, but we dropped. So we are leaving London at this point. But in most cases, your trading range will work during this time. With this time frame, will work during this time and move away during your trading time. So this was the reason why the frustrations and everything came out. So during London, this is the trade that was supposed to be taken during this time, exactly at 4 a.m. After you have a displacement, you have this fair value gap right here. Then now the choice comes. If you take this trade right here, this needs the knowledge, I mean, to self breakaway gaps to go forth. So you have a fair value gap right here. You have a swing low right here, the one that you admit, or you have this one anticipating it to be a swing low. But you want the price at least to go to premium level, at least this fair value gap, as it aligns with this. I was waiting for the trade to do that, but now I'm investigating even further. So this is London trades. London trades when lower traded low. And if you can look at this, let me use the reference of yesterday's trades. Tuesday. Okay, hourly is okay. The reference of yesterday's trades, guys. This one right here. I wanted price to come to this level, finally to come to this low. This trade we were looking at, and as you can see, this is the time when we took out this picture right here. And then you can go to London 15 minutes. What is happening here? This is okay, London 15 minutes, right? This is not yesterday. Yes, this is yesterday, the daily. Oh, this is Tuesday. Remember that we said yesterday we did not take the analysis there. Sorry for that, guys. But even following Tuesday, you can tell yourself, even following Tuesday, you can tell that this have been our buyers coming to this low. We wanted to come to this low. So now we had this. We came to the low. Now we're going to look at our time of trade. And usually when this happens, if this happens during London, I just go to silver bullets. I look at silver bullets and stuff. Then we'll go to from 10 a.m., which is here, to what? Not every day your trades, guys, will come out on a silver platter. You'll just have to train your brain to see them happening. This is where I was supposed to get my trade. As I saw price moving around here, I guess this is where I messed up. I saw this violating. And after this violation, this was the test. And you can see from before, when I started this video, I mentioned that this can be tested. Come back and get a test. We might even experience that for coming days or weeks before we break it. So it came into it. This is where I lost everything. Plus, we keep on disrespecting the fair value gap, but that was my bad because I did not wait for the fair value gap occurring inside. You see this time I was using the one outside here, so expecting the price at least to spool further high. But it is what it is. We lost that trade. It's fine. This is what we're supposed to be saving. Yesterday we had a PMI 10 a.m. You just go here. I grab my speech bubble 10 a.m. I'm going to look at the 10 a.m. Plus I had to incorporate the what is this? I had to incorporate the what is this? I had to incorporate the news, of which is something that I took lightly. 10 a.m., which is this. Usually there are Judah swing news, So today what happens? We have PMI at 10 a.m. Sorry for that. I just need that. And I need NYSE as well. As you can see, NYSE right here, 9:30, this candle right there. I treat it as a Judah swing. Then here I have NYSE. NYSE right there. I have my NYSE right there. Guys, this is the work that this is the most of the work that you will have to do if you pick in this and you want to do this the right way. The skill of trading and everything, guys, you will do that. That one it doesn't matter, guys. That one doesn't matter. And remember, we are taking only the trades here. We are not taking what? We are taking only the trades. The trades that the algorithm. We are not choosing the what is this? We are not just documenting what we did. That is negative trade. I do not want to even see it again. I've studied from it. I got a study from it. I've learned from it. Then that will be it. Then we have a fair value gap right here. Let's look at this high here. Before I start to utilize the second hand. The high is 54 even. Let's look at the high here. The high right here, it's 53 and 3/4. So we utilized this as a second hand, if you may ask. This is what the algorithm utilized. And right the seconds before, guys, this will frustrate you. You know that you can call the price to come to your direction, but during that it happens right before, because your plan and your rules says you do not take a trade anytime before this time. If you're trading a silver bullet, you can see how heartbreaking this is. But here was a trade, the one that I did not take serious. Here was the trade, the closest hanging fruit. Guys, like this, there was nothing here. You can see it was not worth it. Let's see. If I took a trade here, then it's worth around, from here to this low, 80 pips, it's worth around 80 ticks. So around 10 handles. So it must be, remember ICT's framework. It must be at least over 20 handles, your framework. So this framework didn't count. So we'll see today's framework, what it happened. So it is very important, guys, to be focusing on such things, because you get the idea now and the practice of whatever is it that I have been teaching. So we got this one right here. I just want to write this time right here. It's very important for me. This 3:54 a.m. exactly 4 a.m. This time is very important for me, because sometimes I take London trades. So whenever I see my charts, remember this is my silver bullet chart, but whenever I see my charts, I want to see this every time, so that I can get the feeling of what it does before the day. So next time, if you know this very well, you will engage with it. You will participate sometime. That's how you build up another systems into your system. But you first need to be able to master this thing. So this was no trading day. I wouldn't say this was a trading day, even if we came in here. But let's look at this and follow the rules, guys. Even if we can follow the breaker, we have the high, we have the higher high right here. Then we have this candle right here. We have the breaker right here. As it starts, we have the fair value gap. Remember, I said whatever that comes in between this candles right here becoming a breaker. So we wait for market to come into this area. As it came into this area, did it break lower? It took time to do that. So I wouldn't be surprised in this type of a market. Why? Because look where the price is. And this will lead, let me save this video right here. This will lead to what? This will lead to today's trades. This explanation right here. Why am I not surprising? Why is this happening? Then you will see that in price, indeed, there is an algorithm and it does make sense. So from here, let's call this thing, guys, no trading day. Reason being because no enough range. Let's just say no. And is the reason why I lost, guys. You can see no enough range. Let's change the color. Let's pick something bright and inside. We want that thing to be stand out. We want that thing to stand out. No enough range, because you would sell to where the buyer's way is to go low. And to go low, you cannot pick this. Even if you can say, I would have picked this, but it did not go into your TP. Let's just say, let me come here. Let's just say you want to go short here. You're utilizing this as your breaker. Yes, of course, it's your breaker. But look at your TP. Look at your all-time target. Your old-time target is reached. You want to stay put here. So is the reason why I wanted to buy. That is the excuse I'm giving for buy. But I've studied from it. So you want to take it from the breaker, from the start of a breaker, of which is this candles right here. You're going to drag here. You want to take your trades from the start of the breaker right there. Above the breaker, your stop loss. Closest hanging fruit right there. For me to take this kind of a trade, of course, maybe if I'm focusing even down below, but for me to take this kind of a trade, guys, I think twice, because it's okay for me to take 1:3 trades, in knowing that whenever I'm going to manage, if ever something goes silly, I will be able at least to capitalize. This one, I need to capitalize it, at least in each and every trade. At least I need to capitalize this in each and every trade. So it is indeed silly, guys, to be doing that. So here, this is not trading range. You want to save this analysis, because they will help you. I forgot one thing. The trading time was 10:25. It was 10:25. Then I want to save the picture for yesterday. The picture for yesterday will be J2. Will be J2. So this one you can even do it once. This one you can, like, you know what I'm saying. This was a bank holiday, is the reason why there's no picture. Then you will always have to follow here. Let's go to J2. No trading day. 10:25, remember. And I want this 10:25 to, let us be fair to our analysis. Our TP was hit at what time is this? Was hit at 14:05. Remember, it's even past the lunch. And our trade shouldn't go even past lunch. So you see, before lunch, this is what happened. So let's write that one. Let's just remove everything that is happening here. That was 10:25 to 14:05. 20 minutes left. 10 to 14. This is like 4 hours, 3 hours, 40 minutes. This was like 3 hours. Guys, you can see the reason why I'm not angry. I'm not mad. I was a little bit somehow before this trade, but I'm not mad. Guys, losing this kind of a trade hour. And there's something that I need to highlight so that whenever I revisit this day, I will know this type of a trade. It can never hit me again. So you will see what I will do instead. How much the reward in terms of pips? Okay, let's just utilize the breaker right here. In fact, I took a wrong picture, guys. I should be fair here. Just a moment. Go into my template. That one, I have it right there. Breaker low. I want a breaker low. This is my breaker. Whenever you see dotted lines on my analysis, guys, know that that is my breaker. Then I have a breaker high. If I put even a high, I will just have to clutter worse than I did right now. Then I will go short. Breaker should be your trade. Above the breaker, it's your stop loss. Here is your TP. 1:1.1. Hit right there. Some days will be like this, guys, but you just have to understand. Not here. This is picture number 2, Gen 2. This is analysis number 2. This is where I keep the trades. Then saved right there. I will revisit it some other time. Before I clean up, guys, I want to explain this, guys. I've emphasized this. Please pay attention. I want to explain this. Now that, let me reference here. Now that we were waiting for price to come into this level. What is this? It's a daily, right? We were waiting for price to come into this level. Now that your price came into this level, this is what you want to do. You do not want to rush. This is the time where you stop, and this will even help you as you go to the lower time frame. You need to have a right psychology to approach your inefficiencies and your lows and highs after they have materialized. Your goal here was to catch a trade from here, going here and go out, right? So as you come here, if you're going to fight with the market, and this is one of the, and it's even a great example as it did as it hits me and did that example. So I'm the part of this example, I mean to say. So you need to wait, see if the price establishes the highs, then participate on the highs, or we go lower, participate as it come back to the low. This is where you catch a break. As it comes here, you don't rush as price comes in this fair value gap. You just wait. First candle, you need to see the close of the first candle. Then if it closes inside, then study the second candle. Then you can take advantage of the second candle to go low. So you need to position even your mindset in the right direction before even trying to take advantage of such things. So let's go to the charts, guys, and see today's trades, what happened on today's trades. Truly speaking, guys, we are not going to mark everything. We have marked everything here. We're not going to mark those certain things. So this is the future high. What if I did this and the price move extra 170 ticks from 150 ticks? Yeah, this could have been great, but it is not great because of the reasons that I just explained. Guys, the price can consolidate inside this or move away and bounce. So the things that I want to, only if I've entered maybe with 2 or 3 contracts, I would take one here knowing that I have covered the loss. If we come to the loss, and my stop loss needs to be where it was supposed to be, right below this candle right here, or below this invasion fair value gap. And this was to risk to reward. So you can see, however, this is my trade going long. Hypothetically, this is my trades. But as you saw me going with one, I've put my stop loss somewhere around here because I was testing with one, but ideally the stop loss at least should be here. This is 1:2. When I mark this, I'm not going to mark that stop loss I've put here. That is me. That was not a system. The system did not dictate to put a stop loss there. I've put one contract there just to put, if it goes against me, we can get what? We can get the low. As we break, I can participate again. Get that right, guys. And you can see me wanting to do what? You see me wanting to. This one needs to be green. You saw me, I needed to do this as price was moving. As price moved here, we took this one, and we also took this one, guys. So plus we had a fair value gap. When price came into this fair value gap, of which I've mentioned before the price came into it, this could be just a pullback. And then if you go to bus driver model, the first video where I outlined the element of trading, I talked about some stops. They are good stops, but some stops are bad stops. Once I see this fair value gap right here being violated, it's a good sign that we're going even further high to get what? To get this buy side liquidity. You can see the buys are resting nicely right here. 1, we took 2. Now we can finish with this one right here. Guys, this needs to be your target. Remember that you are buy side liquidity. Remember that you are doing what? Remember that you are trading intraday, you are scalping. You just want to get those trades and leave the market. Even if I got the half of it, it's even good way to do it, because looking at the average, then this could have been, this is the type of a trade that you are going to save, so that next time you will never, ever, ever, ever miss this type of a trade. What is missing in our analysis? We are missing the London low, of which this time we don't need it, guys. We can just get the open, the midnight open, and then after the midnight open there, I don't think we need the London low. If you can get the midnight open right there, then right there it's your London high. Can you see buy side liquidity? It's not just any buy side liquidity. This is London high. You get the London high buy side liquidity right there. So for price to come here, this should be your trading range for the day. And that's it. You collect whatever is it that you collect. Plus, we are going to lunch. So you just want to do this. This is what you want to practice doing each and every time. You saw me looking at this high. I don't need to mark this London low during the time that it was taken. So I told you about the between 5 to 7. So this is when it was taken. Then revisit the yesterday's kind of a trade style. How do I know? Because I saved the picture and I was talking about it right now. Then we went for low. We went for 50%, in fact. Then we gave a little bit of a mohawk. Plus, I've shown you guys here. Take a look at here. Here you go low. But take a look at here. No. Where am I going? Yes, okay. Here. Take a look at here. Same asset price. And this is the reason why ICT emphasized that you trade the one that did not take out the liquidity here. This was supposed to be that entry right there. Fair value gap, displacement high, fair value gap, entry right there. 1020. Then you could have been caught that one right there. Then we have our setup, guys. I don't know what more do you need, guys, for me to explain, but this is how it is. We have the news taking place. I have to save that because let me copy this. In ADP during 1535, of which is 815 and 830 respectively. 815 this right here, the open, this is only ADP right here. It was 830. Let's make it 12, shall we? We have an ADP right here. After ADP, 830 right there. Another news came out. Unemployment claims. At 8:30. We have unemployment claims 8:30 right there. Then we have NYSE 9:30 right there. Open there. NYSE. Guys, you see, as you develop, I want to put it right there. Or I want to put it on this candle. Then I will remember, I know, I will remember when I see this as NYC, I will remember that this is that candle right there. But here's the takeaway. You have a smart money divergent, and then at the test right here, NYSE, this is what you have. Then you have that retest with a fair value gap, of which it was respected today. As we even investigate more, we have a fair value gap of which it was respected today. Again, here it is. Here is the importance, guys, of revisiting. That was respected today. This was supposed to be the trade, but it's 9 before 10, exactly at 10 o'clock. This was supposed to be the trade here going up, but as I was looking for the one that was formed inside, as it was formed right here, this could have been a nice one, but you wouldn't trust it as you see those lows right here. You wanna mark this. You wanna mark this time right here, so that as you study, but you don't want to clutter your charts, so that as you study your price, you will understand what is going on. Then the price gives you another chance right here to even move even higher. And this was going to be 1:6. This was going to be 1:6, of which I claim that maybe you would have minor, maybe one contract left if it was me, because I was going to take something here. Of course, I was going to take something here, even something here, not to let it all run to this area right here. 1:5. This is what you want to capture on algorithm. 1:5 of how many ticks? At least it ran 315 ticks. Entry time 10:25, exit 11:15. Then this is what you want to do. 10:25 up to 11:15. 10 minutes before 1 hour, so that means this is 50 minutes. This will be 50 minutes trade. This will be 50 minutes trade. And the trade was a what? The trade was a buy. How much is the risk to reward? This is 1,1. 1,1. Let's not forget that one. We'll revisit the pips. How much is the reward? Guess 1:5. So you just put 5. Why are you doing this? You want to see the on average days. You will see the psychology as this comes. On average days, you want to see how many risk to reward do you catch per trade on average. How many ticks do you catch on average? Here we talked about 315. Then you are done. Your job is done for the day. You've just saved your trade. You've saved everything. Then I will come to this one, because you don't want to regret when you need it. So around 204, around 200 ticks. So basically you can see the number of ticks that the algorithm is moving around your trading session. Then you can now, if you need any improvement, your improvement will be here. You need to catch the at least closer to perfect trades. Then you will then improve here. But you don't do anything here. Please don't hold your trades because you want 1:10. That the one that will cost you 1,000 ticks. I know yesterday and the day before yesterday, more than 1,000 ticks were moving in the market. But how many times does that moves in the market and during your trading session? So this is the average. This is the picture number. I'll have to reference the picture now. I have to put it nicely in a position where I will understand and see it. how do I take a screen capture? I put, at least I want to, most cases I want to see my midnight, so that I can, even if I did not mark, I can just trace my Londons and whatever that happens whenever I'm watching I'm watching these pictures, whenever I'm referring back to these pictures. So what we have right here, can we save this? Yes, we took. We can save this. This is enough for saving. As we move on, guys, we are going to have this. We are going to move certain things. We are going to remove certain things until you see this price naked. 2020, come 2024, guys, it's gonna be a gem. You better subscribe. You better book your spot, guys. This thing is for free. Book your spot by subscribing and commenting into these videos, so that I can, like, don't go there and exist. Don't come here and exist. You must participate and feel the authority that you are taking your precious time to study this thing, and this is what you want. The more you comment towards me or others, that's when you get engagement. Even you are even exposing yourself. And the most person that you don't want to disappoint in life, it's you better than anyone. I'm telling you, guys. So you wouldn't want to disappoint yourself. If you are the member of this community and you get an engagement, you get my attention, or you get somebody else's attention, you do not want to lose that. You won't want to lose that. So that is the way of you having to study and building a nice relationship with me. So if you catch this thing at this earlier time, please subscribe, let's comment, share with other people, other members, so that I will know there are more people who needs my attention. Then I can talk to my conscience and give a time to that without wasting any time, guys. This is 2024. See you on the next video.